right, hey guys. First off, I want to thank everybody for sending in their feedback on the 3S code as far as the settings, the parameters, the variables, and all that they're using right now to have success trading 3S code. The feedback was amazing. I'm taking all of it into account. I'm taking a look at some of your settings that you recommend or that's working for you. Honestly, I'm not really changing things up too much on my side, keeping the same settings that you see here. I've got the 521 is for my short-term moving averages, and then the 200 here in the thicker purple line as kind of an overall trend guide for reference. But along with the feedback, I did get some people that wrote in and say, hey, it's great, but I would like to see a little bit more on how you kind of analyze on an intraday basis. Why would you, what makes you take some trades versus skipping others? And really nothing has changed that much. I know some of you will take almost every setup, but as I've said before, it is a counter trend system. So we want to make sure that we only take the highest quality setups. We don't need to take every single setup, but I'm going to show you a couple of tips and tricks that you can use if there are some setups in the works, but maybe they don't meet all of your criteria, or in this case study, they may not meet my criteria, and these are some of the things that I would look to do. So here is today's action, 5-minute S&P. Market just opened. We're down about 23 points. You see we're selling off. And looks like we had an early morning trade here around 2:30 the European session. I was sleeping. And then we had a potential trade set up here around 7 a.m. Central. So this is a trade I would typically not take because we have not had a cross of the 5 and 21. So the price action is still up here above the 5 and 21. I would prefer to see the price action below these averages before taking the trade. However, there are some exceptions. So first thing that we can look, and I didn't take this trade, I was walking with my kids to school, but a couple of things that stand out on this particular example is here, if we scrunch this in a little bit, you can see that we are at an area of price resistance, price structure here at the 3360 level. Okay, and then you can see we've got a lot of wicks, wick rejections up here at these levels. Two, it also happens to be we get this resistance or the rejection here at the 200-day moving average, but we don't really have divergence. You see these new highs are also new highs on the RSI, but that would be one you could consider bending the rules a little bit, because we are at resistance here from a pure naked price action perspective, also 200-day moving average, where you could go ahead and consider maybe jumping in. Now again, I like to wait for that extra confirmation of the price being below the averages before getting in. Plus, this action is a little tight. But with that being said, when you find a potential setup where all of your rules or your criteria are not met on that time frame, you could look or drill down to the lower time frame to potentially find a setup to get in. So remember, this is around 705 that we're looking at this setup, anywhere 705, 710 area. And if it doesn't meet your criteria, which it does not meet my personal criteria, I don't have the divergence, price action is above the moving averages. So we could go down to like a 1-minute chart. Go to a 1-minute chart, and let's go back to that time period of around 7 o'clock, which is right over here in the middle. Let me just move that over. So here is that time frame. So if you had you have either two monitors or you have a double pane, kind of like I have this chart over here, you could have a 5-minute next to a 1-minute, or a 5-minute next to a tick chart, or maybe a 30-minute next to a 5, whatever your preference is. But this would allow us to potentially take the trade based off of the lower time frame, because it does meet the criteria. So we get the break, market comes back up, and then trades back down clearly under the shorter term moving averages. So we could look to jump in here at 3360 and take it on down to about 58 quarter. And if you are trading multiples, you can just trail per your trailing stop guidelines. Now, since we are on the 1 minute, we might as well take a look at this setup, another one that meets all of our objectives here. So here we have the averages crossing back above the 200. We've got decent short-term support here at these levels. As the market was coming up and breaking above the number 2 high on the 1, 2, 3 setup, we were already above the short-term moving averages. So that was a good trade to take here at around 58 quarter, 58 half, and good for a 1.5, 2 point trade there before it started to kind of break down. So that is a way, if it doesn't meet your criteria on a higher time frame, again, it could be an hourly, 30-minute, 15-minute, 5-minute, etc. You could drill down to the lower time frame because you're likely getting a setup on a lower time frame, which would usually allow you to take a little bit less risk as well. Let's go back and take a look at a couple of examples from yesterday too, and see what trades I took and which trades I did not take. So here is a trade early in the morning, so only 2 setups. Remember, I'm looking for around 6 a.m. to about 2. Don't really look to take trades past 2:30 p.m. Central. So, and I'm looking to actually close out any positions going into that last 30 minutes, last 15 minutes of the cash close. So here's a trade I did not take, did not meet all my criteria right here. And then here we come down at around 10:30, which is a good looking trade. We have a lower RSI, so we didn't get the divergence that I typically like to see. But what I want to show you is if we come down to, we'll just go to like an hourly. And what I want to see is, do we have any type of structure at those levels? So we came down hard and rejected hard. Have we been at this area before? And typically I have these lines already drawn out beforehand, but we can just take an hourly chart and look back in history, and you can see that this has been a very sticky area, and what we can do for visual points is, just look at the obvious. Look at the obvious. What sticks out like a sore thumb? We've got resistance here. We've got support in this area. We've come down and rejected off of that area. Now we're violating that this morning, but we have an area there that we rejected off of. So it gives us a clue that we're likely to see a continued bounce. Now, so that we have that, but look, the price is well below these averages. The averages are spread apart. I do not like to see that, but notice that when we come back up off of these levels here, we break and then we retest and then we continue higher. So that was a good place to enter here around the 59 area. Comes back down and retest a couple times. And if you're closed, and then if you would look to close out before the cash close, that's about an 8 or 9 point trade depending on where you got out. As I talk about in some of the other trainings, is we get the break and then we get the loop or the hook back up and through, and the moving averages are crossing. That would be a way to get in rather than just taking the initial breakout with these averages being so far spread apart. Now, if we look at crude oil, let's take a look at crude oil. So this is yesterday's trading, or 220 trading. I would not take that. See these moving averages here far apart. Here's one that is a setup that you may or may not take. To me, it's a little bit more aggressive. There's a fair amount of risk, with the size here, but we broke through and then we got the retest. It's not as clean to me as I would like to see. So I had no trade on crude yesterday. But if you remember what we just went over on the S&P example, where we're not quite getting what we like here on the 5 minute, but we know we may have a potential setup, is we can go to the 1 minute, the lower time frame. And remember that setup was around 10:30, 11 o'clock. So here is the same formation, same setup, but on a lower time frame. So you can see that we've already started weakening here on the 1 minute. Here was the punch through. Market rejected, came back up, and then we came back down. So good entry points here. We're hooking back down through the number 2. Averages are now clearly crossed in a clear short-term downtrend, and we're able to get short here at 54.30. Now, we know that we could possibly run into some problems here at 54.15, which is a 200-day. You can see we did pause temporarily there. We continued to go down, and we met our profit objective here at 54. So that's a nice clean 30-cent trade, $300 per contract. And just sticking to the 1 minute here, you could see that we did get another potential long. It's a nice clean long. We do have the 200-day there, so that would be an area of caution. But we did come back and finally hook back up and through later on in the session. So that's what I mean by using multiple time frame analysis. It's not a requirement, but it can help you get into some of these trades that we may miss because all the things don't set up on that time frame. So if things aren't setting up on your time frame that you typically watch, I would encourage you to go down into the lower time frame. Again, you can start from the daily and then go into the 4 hour. Start with the 4 hour, go into the hourly, start with the hourly, go into the 30-minute, 15-minute, and so on. So those are a couple tips and tricks that you can use, and I hope that helps. And hopefully you caught a really nice trade this morning here. Nice quiet morning before the market opened. We had a lower low here, higher low in the RSI, thus giving us our divergence confirmation. Short-term moving averages have crossed. Good entry there at 52.95, right up to target of around 53.20. So again, I appreciate everybody's feedback. We are in the middle of doing our back testing and running some different optimizations, and so we look forward to seeing what those results look like and sharing those, and continue to enjoy getting your feedback, and feel free to send any questions or comments that you may have. So good luck, good trading, and see you on the next update.